Hello there everybody, a very good evening to you all and welcome back to another live stream here at Taurex and welcome to our US inflation live event. I hope everyone has had a good trading day, a good trading week and is looking forward to hopefully some really good market moves coming up in the next sort of 10 minutes or so. I do apologise a little bit late. I had a meeting which overrun a little bit, and but we're here now and we're ready to go when it comes to the US inflation. So if anyone does have any questions that they may have on the stream, feel free to get in touch and ask, and I'll be more than happy to assist you there. Okay, right. Because we haven't got as much time, I want to jump straight in and have a look at what we're expecting for today in terms of the US inflation live. So if we head over to our economic calendars and I filter, let me just move aside here, and I filter to high impact. Here we are. So CPI year on year, 2.9% is what we're expecting. The actual figure that comes in, I mean, we shall see. Let me just quickly load this, my MetaTrader up on my phone as well. So I've not been very prepared today, so I do apologise. So yeah, 2.9% is what we're expecting. And this is going to have a big impact on the markets. I've noticed today that the markets have been very quiet. I don't know if anyone else has noticed a similar sort of thing, but there isn't really too much movement going on. I think we're waiting for this inflation print, which is due out in 8 minutes' time. I think from there we may see some volatility. So the idea of the stream today is to actually be live when that inflation print comes out, and then we will break down the print, what it means for markets going forward from a fundamental standpoint. We'll also have a quick update on my USD yen trade as well. And of course, as always, this is more of a sort of a live Q&A. If anyone does have any questions or anything they want me to run through, then I can do that as well. No problem. Okay. So, right. Just quickly, there's no one in Discord. Right. Okay, cool. So, also wanted to quickly point you in the direction of this. Basically, last night what we saw was the Fed Chair Jerome Powell, his testimony. And during that testimony, what we saw was a situation where he basically said that the Fed are in no rush to cut rates at all. Right? That's exactly what they said. No rush to cut rates at all. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In other words, basically, very much data dependent on his approach, which was, again, as I said in the weekly preview, no real surprise there that he was data dependent in that, because it's pretty much exactly what I expected. But anyway, so the other thing that he said as well was down here. Where was it? Where was it? I lost it now. Oh, here we go, about the soft landing. This was interesting. So he was actually asked directly whether he thought the US was, experiencing a soft landing, which is this paragraph here. A term that basically describes lowering inflation back to target without significantly damaging the labour market. Basically what it means is being able to bring inflation down without crashing the economy. That's basically what he's saying. The answer to his, the answer to that was, it's not for me to say, which is a weird thing because I thought maybe it would be for him to say. But anyway, so he sort of sat on the fence there completely. And he also said about, something about the jobs market and how long we got 5 minutes, and how it wasn't really contributing to inflation, basically, which sort of put the NFP on Friday, just sort of squashed it. No one really cared about it after that, which I found interesting. So, yeah, that was what he said yesterday. Nothing too much to worry about. When it comes to markets for today, if we have a look, and thank you very much, Lana, for your comments in the Discord channel about MT4 and MT5, perhaps a bit of fundamentals, or for example, if the market, I'll build that into my streams going forward, into the streaming schedule for next week. Okay, I'll make sure I do that for you so we can have some more workshops. Right. Okay. So, looking at the markets here, can't get, for some reason this isn't loading up on my phone. It's really frustrating. There we go. Right, got it now. US 30, NASDAQ, and the S&P 500 pretty much are doing nothing. Right, we can see that. If you look at the only real market which is moving is dollar yen to the upside, and we'll talk about that after the actual inflation print comes out. And also oil prices are falling by about 0.9%, which is interesting. Other than that, there's not really too much going on, and that's why I'm really interested to see what this inflation print does. From a fundamental standpoint, what it will do is the markets are a little bit, I would say, confused. Are we going to get cuts this year? Are we not going to get any cuts this year? You know, I think the markets are currently pricing in 2 at a maximum. Something like an inflation print is what could move the needle. What could basically be a catalyst for that expectation to shift. Basically, what we're seeing is the markets are pretty much in line with what the Federal Reserve are saying. So pretty much everything that we already know has been priced in. It's waiting for the markets are waiting for a data event which is a bit out of the ordinary, a bit above for a proper data event, sorry, like an inflation or an NFP to be, or a central bank decision to be way over what we thought or way under what we thought. And today we do have US inflation, and that's why I wanted to come on and actually cover the event live, because I wanted to basically see if we do get that knee-jerk reaction and that relief of that tension that we see in these current markets at the moment. So yeah, US dollar not really doing too much. The gold prices are actually are retracing a little bit, which is good to see, because I'm looking for another consolidation period. And then I'm looking for, actually had a bit of a bearish break there. Interesting. See how that goes. Does anyone have any questions on the actual inflation print itself? Is there anything that anyone wants me to cover? Because we've got 2 minutes to go until that release comes out. And if there's any questions that anyone has in the lead up or any markets that you want me to quickly take a look at, then please do let me know. But generally speaking, if we do get a higher inflation print today, that's going to feed into our hawkishness. That's going to feed into our dollar strength. Okay, but if we do get, and probably, to be honest, it's more difficult with the gold market because it can act as an inflation hedge as well. With the stock market, if you're trading stocks, typically stocks don't like inflation. That's the reaction that we've seen this year so far. A little bit of a subdued market, sort of been pausing in range bound. If inflation comes in 3% or higher, then we should expect some stock market downside. But I think one of the best plays for this week, and I said it on my Monday stream, is if we do manage to get a softer inflation print in 1 minute time, if we do manage to get that, then watch out for this US 30. Anyway, let's look at euro dollar, because we've got 1 minute to go until the actual event comes out. I'm going to drop it onto a 1 minute chart and we'll see what that reaction is going to be. Good luck, everybody, to those who are trading. Five seconds to go. Here we go. Ooh. Here we go. Wow. We've just had inflation come in. It's at 3% in the US. That year-on-year figure's at 3%. Look at the reaction in the in euro dollar. I said that the worry was that we were going to see an inflation print of 3% or higher. That's exactly what we've got. Look at the state of that chart. It's probably going to be, I imagine, bearish for the stock market as well. Yep, there we go. Wow. There's your hawkish reaction, everybody. So we are going to be continuing to price out interest rate cuts further out into the second half of the year. We may not even get any this year. When we see stuff like that, this is the core CPI 0.4% above estimates, the month-on-month 0.2% over the estimate, and CPI at 3%, which is 0.1% over the estimate. The highest level of inflation that we've seen, the highest year-on-year figure that we've seen since July. That is bullish for the US dollar, bearish for stocks. Wow, look at that. That's absolutely huge. Okay, right. So look at dollar yen. It is absolutely flying. For those of you who trade the trend rider, I actually just got a, which is one of the strategies that I use. You can see that retest of this blue line here. That was our support area, and you can see that initial reaction, which has gone much, much higher. Okay, very interesting indeed. So we'll see how this goes for the rest of the day. Yeah, wow. Look at that DXY. What do we expect now for the dollar then? We don't need to go too crazy, but look, dollar index. Could we now see a push up to 110? That would spell weakness for euro dollar. But, you know, the best market at the moment, look at this dollar yen. It's absolutely trading higher, like much, much higher. Wow. Okay, right. So, with that in mind, now we're on the dollar yen chart itself. I want to actually show you how you can make money in the markets and be wrong in your analysis. This is a prime example. So, dollar yen, trade be placed, trade idea that I posted in the Discord channel. Right, we entered basically off of a liquidity grab and also into this supply zone, and we initially started running really well, and I was targeting new lows. I was targeting 150, so a nice 4-to-1 risk reward trade is what I was targeting. If you look what happened to price, we trade lower, right, and we get to a situation at some stage, if you ignore all of this, where we are 1.5-to-1 risk reward. Now I always close half of my position at 1-to-1. So I put 2% risk on, I closed half of the position at 1-to-1 and moved my stop loss to entry, which meant that when the market came up and actually would have hit my original stop loss, a trade which would have been a 2% loss if I left it alone was turned into a 1% gain. And that risk management in play whilst you're managing the trade live is one of the most important things as traders, because you can be wrong and still make money. That's the beauty of it. So I just wanted to share that with you. So with that in mind, obviously, I will fill in my trading journal with the outcome of this trade, and that's why I always say people to make sure that you are always have a risk management plan when you're in play in the actual trades live. So I can actually go on to the trading journal here. So we exited the market at the entry, 152.528. Closed P&L was, I think, 680, which is about 1% for me. So I did actually move my SL a little bit earlier than I normally would, but that was because I had a 1 hour bullish signal. So moved SL to entry at 1-to-1 and closed half of the position. I'm going to put in capital letters here. I made money by being wrong, and that's the biggest lesson that I wanted to share with you today. So that means I can now update my total P&L by copying this over. If it lets me do it. Why doesn't it let me do it? Oh, that's why. There we go. Trade number 5 of the year. And then when I go into my P&L now, that means that I was 2% down in February and now I'm 1% down. So total profit for the year is at 9%. January was a great month. We know about that. That was at 10%. And February, so far, 1 win, 1 loss, currently minus 1%. Okay, good stuff. Right, so to summarize, US inflation, sorry for clapping on the mic, much higher, really, than what the Federal Reserve will enjoy or be comfortable with. For me, that spells more potential, or sorry, not more, less cuts this year. We now even may be pricing in one cut. I'll have a look at the CME FedWatch tool for the stream tomorrow. It's dollar positive for sure. It's definitely stock market negative as well. We've got all this uncertainty that's going on with the global economy, with Trump tariffs, etc. Add inflation on top of that. Inflation should be falling. It's not. It's spacing out. It's going higher. And that is a concern for the Federal Reserve going forward. So we'll continue now to look at dollar long trades. I do like the look of dollar yen to the upside. It'd be the third time I've traded in a row. And also, I'm not going to sell the stock market because I don't like selling the stock market. But I will be looking out for any meaningful dips or any meaningful 5% corrections. See if we can get any and buy the dip opportunities. Okay, thank you very much for those who tuned in. Good luck for the rest of your trading day. It's late here for me now, fairly, so I'll probably be clocking off, but I'll be active in the Discord channel if you need me. The link's in the description. Come and join us and let's chat markets. Okay, thank you very much. Take care. Trade well. I'll see you soon.